But how long do you think banking as a business hold out, given the fact that there's pressures from investors? There's also pressures from what we call today the shadow banking industry, the hedge funds that are declaring far more profits, which pulling a lot more talent than commercial banks. And there's always a temptation for a CEO to look across the fence and say, why can't we bring this on in-house and make the business a lot more profitable?
Well, yes, except that you're taking on more risk. I mean, the record is not great, is it, in terms of what investment banking has done for commercial banks. I think it is perfectly possible to do the two under the same shareholding, but I don't believe that it should be done within the same corporate entity. I feel that if we look across the whole scene, that very few businesses have succeeded in integrating the two businesses satisfactorily. And if you consider that the sorts of commercial banks we're talking to have probably enjoy, if that's the right word, an implicit guarantee from the jurisdiction in which they're working, then I think that proprietary trading does not sit well with the concept of an implicit guarantee from the government.
A number of banks also get into the trouble of mixing proprietary trading with what they do for their clients. What do you think is happening on that front today?
Well, I think as a matter of fact in the marketplace, the level of activity is reduced. The buyout businesses, private equity is in a low point at the moment. But it will come back again. So I do feel people are waiting to see what the result of the review of what's been going on in banking over the last few years will be, and whether there will be governments insisting on separation between proprietary trading and commercial banking or not.
So what do you think the regulators should be doing at this point?
I think the regulators should separate investment banking or stroke proprietary trading from commercial banking. That doesn't mean to say they cannot be done under the same ownership, but they should separate them. I think the investment banking side should be in a separate subsidiary, separately capitalized, and should have the capacity of failure if that is what it leads to.
And what is your take on what's happening in the US today, where the investment banks are being reconstituted as commercial banks?
I mean, I don't agree with that, and I'm not sure that that's the end of the story.
And what do you think the end of the story might be?
Well, I don't like to prognosticate things like that, but you could effectively see going back to a sort of Glass-Steagall situation.
And in terms of how you think the U.S. U.S. investment banks are going to play out in the next few years, in the medium term, what do you think the scenario is going to look like?
I don't really know, to be honest. I mean, that Goldman Sachs I think is far too big. I think it poses a systemic risk. I think as such it enjoys an implicit guarantee. As such, one has to ask the question, is that level of proprietary trading compatible with that situation?
Given the scenario of how financial services turned out today, what kind of banks or which banks do you like? Which banks, when you look at them, you think they are doing the right thing and sort of have the formula in place to be sustainable and to continue growing?
I mean, I think I like Santander. I like the way that they've developed internationally in terms of they tend to favor having minority shareholdings in these countries. They individually capitalized in these countries. They have a strong credit culture, and They are a very good retail bank, and they have resisted the temptation to go into investment banking. So I like Santander. I also like HSBC, despite the fact that it's done various things over the years. We all make mistakes, but obviously it's very well positioned. I think that it's kind of naive in a way to think that it is above and beyond all the government. It probably enjoys an implicit guarantee from both the UK and China. I mean, but I think it's in a good place.
Well, the other thing about these two names that you mentioned is they act over and above shareholder return as an immediate goal. They're conservative. They almost make shareholder return as a secondary goal to maintaining the franchise.
Well, I wonder if Santander really is conservative. I mean, this is a bank that took positions in South America which very few other banks would do, and in fact built up a competitive advantage in its understanding of South America. It is thought of as being conservative because it is fundamentally a retail and commercial bank, but I would not honestly think of it as being a conservative bank. They think about new things and they do new things. And I was very close to them for several years when we had our collaboration between RBS and Santander.
Are there institutions coming online which you think that are doing the right things today that would probably be a Santander of the future in Europe today? Smaller?
I cannot honestly say that there are. No, I cannot see that there are.
Give us a sense of what you think the UK is going to look like in the next 3 to 5 years, given the current government and given the current priorities that the government has put in place.
Well, I think we're really in a position where that's very difficult to say, because the Banking Commission will be publishing its report over the next few months. We could see radical changes being made in the UK banks, particularly with Lloyds. It's conceivable that Lloyds could be broken up. Certainly the transaction between Lloyds and HBoS was wrongly conceived, and standing back from it probably should be reversed. Whether it's pragmatic or practical to do that is a different issue. I think that the results of this, nobody really knows at the moment. There's a lot of uncertainty there.
The Lloyds HBoS deal, wrongly conceived because of the size of the deal, because
the market shares, well, it's wrongly conceived for all sorts of reasons. Firstly, it was a deal done in haste. It was a deal done after the mortgage issues had emerged and yet went ahead. It was a deal done with a political dimension, and it was a deal done as a way of avoiding the Competition Commission. Lloyds had for years been trying to do a transaction, but it had always been stopped because of competition, and correctly so. They have a very large share of the retail market. This was a way of getting round that. It suited the government of the day. It was just wrongly conceived.
And what do you think should the checks and balances be put in place going forward to avoid something?
Well, I think the checks and balances were there. They were just avoided. I think the government felt that it could, by doing this, avoid the problem of HBoS, but of course it then just transferred the problem to Lloyds, and I feel the issue, it was a government decision, really.
A government that is quite determined to keep its budget in place and not take on any more risk than it needs to. What's the implication for banking in the UK today?
Well, I mean, I think that if you look at the issues in the Lloyds HBoS, the government did not want to take on the responsibility of HBoS, and they felt that by passing it or making it possible for it to be passed to Lloyds, that would avoid them doing so. Of course it didn't. It ended up on their balance sheet anyway. Effectively it's always on the balance sheet because it is too big a retail bank to fail in the sense of not meeting its depositors' expectations. Therefore, I think that was a wrong decision.
So do you think that the UK government should be throwing more money at the financial sector until it sort of finds its feet?
I don't think they should be throwing more money at it, no. I do think that you have to face reality, and the reality is that these big banks cannot be allowed to fail in the sense of not meeting their depositors' expectations. I think the reality is that they are guaranteed by government.